Canada tripled the number of jobs economists were predicting in January. With that number, the unemployment rate also sits down at 6.6% from 6.8%. We're joined now by Carlos Capistran, Managing Director at the Bank of America. And he joins us now. Hi, Carlos. Good morning. How are you?
Hey, good. Good morning. How are you?
Very well, thanks. Let's start in Canada. We are a Canadian network, so let's do that first. We know the big dog is the U.S. We'll get to those in a second. But I believe the number was 75,000, about triple the expectation. And the unemployment rate ticked down to 6.6 from 6.8. What did you make of the numbers and the numbers within the numbers?
So I think it was a solid labor report. You know, it's a very good report. This 76 was really good. Full-time employment was 35, so also really good. And it's not just 1 month. If you look actually at the last 3 months, the change in employment has been more than 200K, you know, so that's pretty good. So we're not just talking about one data point here. And then the unemployment rate, I mean, it's coming down now, 6.6. It was 6.7 before. So that's also a good surprise. But even if you look into the details, for instance, in hours work, I mean, those were solid as well. So I would say overall, a pretty solid labor report is what we got today in Canada.
And I noticed that the manufacturing sector was fairly strong, adding 33,000 jobs, a third of those coming from Ontario. What do you make of that?
Well, I mean, it's just part of the recovery. I mean, this time around, it's manufacturing, but again, and that's what explains this month. But we are seeing overall good numbers, good labor creation across sectors and across regions in Canada. So overall, I think we're pretty confident that since the end of last year, we are seeing a recovery in the Canadian economy.
And I understand, Carlos, that you and your team have a base case for the Bank of Canada to not cut any more interest rates this year. Is that correct?
Conditional on tariffs. Yes, that's correct. So if we forget about tariffs for a second, I mean, if we can do that for 1 second, then the picture that we see in Canada is, you know, it's recovery. The Bank of Canada is already at the neutral range at 3%. Inflation is at the target. So the Bank of Canada can just stay here, you know. By the way, we also have the Fed on hold. So that's part of the story. But what we see is lower interest rates in Canada are already working their way through the economy. The economy is recovering, so the Bank of Canada can just stay here. That's without tariffs, right?
And just lastly on Canada, do you think that, and you've been hinting at this, but do you think that the Canadian economy is actually sort of stealthily getting better incrementally, and maybe people aren't realizing it necessarily?
Correct. I mean, I'm based in New York, and when you look at the Canadian economy from the outside, the truth is that it's looking it's looking that it is having a pretty good recovery. Of course, we still need to see the new numbers that may be hit by all the uncertainty that we have with tariffs, and that probably is going to have some impact on the economy. And then eventually we need to see if we're going to have tariffs or not. If we do, then that of course would change the story, right?
All right, so turning to the United States, 175,000 job additions were expected. We got 143,000, and the unemployment rate ticked down to 4% from 4.1. Can we call January a bit of an aberration because of the California wildfires and because of the unusually cold weather across the U.S.?
Correct. There was a lot of noise in the U.S., so getting the number right this time around was really difficult, and we got a number below consensus. But I think that what we should concentrate here is that the number that we got, it's actually a good number. So we also got a good jobs report in the U.S. And again, the way to see this in particular is by looking at the unemployment rate, and the small fall in the unemployment rate, I think, is the one that tells the story here. And the story is good job report in general.
How would you characterize the U.S. economy overall? There's always so much debate as to which way it's headed in terms of growth and inflation, et cetera. How would you describe it?
So at Bank of America, we still see good growth in the U.S. economy. We still expect the economy to continue growing above potential. We have 2.4% growth for this year. Potential maybe it is 2.3 or something about that. So we still see growth above potential, and we still see an economy that looks good. We particularly like what's going on in consumption. Other sectors may be decelerating a little bit, and of course, the economy is decelerating from the numbers last year, but it's still very good growth, above potential growth, and partly because of that, and because the inflation in the U.S. is kind of stuck a little bit above the target from the Fed. We believe also, same as in Canada, that the Fed is done. Basically, we believe the Fed is just going to remain here for the rest of the year. Again, all of this is pending on the tariff story and some other U.S. policies that could change. But in our baseline, we have the Fed on hold, Bank of Canada on hold.
All right, very good. Thank you for your time today, Carlos. Have a great weekend.
Thank you. A great weekend to you too.
All right, thank you very much. Carlos Capistran, Managing Director at Bank of America.